All right, I'm going to continue with the note. The next point is sales discounts. Now, we talked about purchase discounts, okay? So, purchase discounts are contra purchase accounts so that they have credit balances, okay? Now, sales and purchase discounts are discounts that we get for paying quickly. Now, there's also sales discounts, and sales discounts are a contra revenue account, so they have a debit balance, and they're discounts we offer our customers for paying quickly. Okay, now you'll notice that there's a star. Okay, and it says that sales discounts are not recorded when the sale is made, but rather when payment is received. Now, similarly, purchase discounts are not recorded when the purchase is made, but when payment is sent. Okay, so you have to understand that. That's key. Okay, when you're recording these transactions. So discounts vary according to their terms of sale. Terms of sale are basically terms agreed upon between the buyer and seller. And there's different types of terms. Okay, one type is COD, and sometimes you see this on information or infomercials, and they say no CODs, please. What that means is payment is due when delivery is made, right? So cash on delivery. Okay, because in regards to infomercials, they don't want you to see the product and determine it's really not well made and then pay. They want you to pay first and then they'll deliver it. Okay, another term of sale is receipt of invoice. What that means is you or payment is due when you get the invoice. We've talked about net 30 days. Okay, so that's 30 days from the invoice date. That's when payment is due. There's EOM. Okay, that stands for end of month. So payment is due at the end of the month. So if the invoice is dated January 22nd, then payment's due on January 31st. If the invoice date is January 28th, payment is due January 31st. All right, the next one is 10th following. What that means is payment is due on the 10th of the following month. So if the invoice date was January 24th, then full payment is due on February 10th. Okay. The next one is in relation to discounts. Okay, that says 210 net 30. Okay, what that means is you get a 2% discount if you pay within 10 days. Otherwise, the full amount is due in 30 days. Okay, another term of sale is 110 net 30 EOM. What that one means is you get a 1% discount if you pay within the first 10 days of the invoice date. Otherwise, the full amount is due 30 days after the end of the month. So if you bought, or the invoice date is February 2nd, then you have till February 12th to get a 1% discount. Otherwise, 30 days from the end of the month. So we said the invoice date is February 2nd. The end of the month is February 28th. So 30 days from there would be March 30th. So the full amount would be due on March 30th. All right. Now, discounts claimed by customers are recorded in the sales discounts account. So that, remember, that is a contra revenue account. It has a debit balance. Now, there's all kinds of new accounts we're going to have to worry about, or when we're journalizing now. One is a purchases account. Now, this account is going to be debited whenever we buy stuff to resell, just stuff to resell. So if we were buying equipment, we would just debit equipment, okay, and credit cash or credit accounts payable. But if we're buying stuff to resell, we're going to have to debit purchases and credit cash or credit accounts payable. Now, we also have contra accounts related to purchases. One is purchase returns and allowances. This is recording stuff that we've returned to our manufacturer for whatever reason. So, since purchases has a debit balance, and then the contra accounts to purchases would have a credit balance. So it has, or you'll credit purchase returns and allowances when we return things. Okay. Purchase discounts, that's another contra purchase account. Again, it's going to have a credit balance, and it's discounts that we receive for paying quickly. Not early, but quickly. That's a mistake in the note. Right? There's also a transportation in account, and we're going to use this when we pay for transporting goods from the manufacturer to us. It's kind of like an expense. It's going to have a debit balance. So if it's in relation to transporting goods from the manufacturer to us, it's going to, transportation will be debited. Okay, so it's going to appear on the schedule of cost of goods sold. Now, the opposite of transportation in is delivery expense, and that is an expense account that records the cost of transporting goods from us to our customers. Okay, so transportation is from the manufacturer to us. Delivery expense is from us to our customers. Now, again, we also have sales returns and allowances. This is a contra revenue. So it has a debit balance, and it's an account we use when customers return stuff to us. Okay? And sales discounts are discounts we offer our customers for paying quickly. Not early, but quickly. Okay? So again, that's a contra revenue, and it's going to have a debit balance.